Welcome to the Payback Life Insurance Agency call. So today, what we're going to talk about is mortgage protection. We're going to talk about a couple of different things here. But first of all, we're going to talk about training calls. We're going to talk about mindset, and then we're going to get into mortgage protection, how it works. And then we're also going to get into how to sell mortgage protection, right? So first off, there's 4 training calls that we should elect to be on every single week. And the reason why I say elect is because you don't have to be there, right? But here's the reality. If we're in this business to do well for ourselves, we want to make sure that we are doing money-making activities all the time, right? And what are the money-making activities? Well, dialing the phones, calling people, setting appointments, running appointments. But if you were to ask the professionals or the gurus out there that are, multimillionaires, the number one money-making activity is training and doing personal development, right? So where do we get the training calls? Well, we get the training calls right from FFL. There is a training call on Mondays at 11 a.m. Central Time that teaches you specifically how to recruit from people in FFL that are growing agencies big and bad and fast, right? These guys are doing it super fast, okay? And I'll send out I'm going to put my email in the chat so you guys all have it. And I'm going to send out a list of when the calls are. But just just send me an email if you guys want that list. Okay. And then I'll reply back with that list. So there's one on Monday at 11 a.m. Our team, Living Hope team training call is at 4 p.m. Central Time. And that is with Jamie Cheerio. He's an integrity partner now. Should definitely be on that call. And then this one right here is going to be at 1 o'clock Central Time every Thursday. And I put it at 1 o'clock Central Time on purpose because right after this is 2 o'clock, and that's Grady Polson's training call. And that website is FFL Watch, like WATCH.com. He's an integrity partner. If you guys don't know who Grady Polson is, you should definitely get to know him. He's been in this business for, I think, maybe 6 years. Didn't know anything about how to sell insurance before that. Now he is a multi-millionaire. So Grady Polson is awesome to learn from. He brings on some top agents to help teach. And today he's bringing on a top agent that is at $225,000 in annual premium just from IUL so far this year. Okay, so get on those training calls. Jamie, Next Level Live is put on by FFL, and I'm not quite sure exactly that time. I think it's 8 o'clock a.m. Central on Friday, but Jamie Cheerio is going to be on there this Friday. He's going to be on Next Level Live. So you want to get on there. So that's the training. So first and foremost, if you want to do anything in this business, we have to get the right mindset, right? Sales is a great business to have because there's no limit of what you can make, right? There's no limit whatsoever of how much you can make. It's got its good turns. It's also got its bad turns, right? But if you're one of those people that have 3 or 4 or 5 bad days in a row and you're like, this business isn't for me, then that tells me right there, the number one thing you need to work on is mindset. The only thing that stops successful people is that 6 inches between your ears, right? Because what are successful people? They are people that used to be unsuccessful at a certain time in their life. And the only reason why they're successful now is because they did the things that unsuccessful people are not willing to do, right? And so in order to do that, you have to put good, positive nuggets, new stuff into your brain. So by doing that, what I do, there's a lot of things that I do. Number one, I try to work out every day, getting moving, getting walking, getting lifting weights, doing whatever it takes for at least 30 minutes a day. Number two, I'm listening to something that's going to positively affect my life, right? Not music. That's not what I'm talking about. I am not talking about music. In my truck, it's Automobile University. I'm always learning something, okay? Whether it has to do with learning about final expense, mortgage protection, IULs, annuities. I'm diving deep on learning annuities right now, right? So that's what I'm learning. I'm also learning about other things, not just in business, but things that I want to get better at, right? I want to be a good parent. So I listen to things about that doctors talk about being a good parent. I listen to things about health, right? My number one thing right now is health. And I learned this from Brad Lee. He asked somebody, he said, if I gave you $1 million, would you be happy? Of course, what is somebody going to say? Nobody's going to say no, right? Of course. You'd be pretty happy if you got $1 million, right? But what if I told you that I'll give you $1 million, but you can't wake up tomorrow? Would you take the $1 million? Probably not. I guarantee you I wouldn't take $1 million. So what's more important? If your health, if you got a diagnosis from your doctor that you got cancer and you're going to die in 6 months, all the money in the world don't matter anymore. Your focus is now on your health, right? And so it's important to us. I mean, we're doing this business so we can make money and provide for our family. But if you're 65 years old and you can't walk, or you're unhealthy and you can't spend the time with your kids or your grandkids, what's all the money in the world going to do for you? Right? So health is a number one priority in my book. And it's not just health for the body, it's the health for the mind as well. Because the health for the mind is going to help you get through those tough times, because you're going to have them. You're definitely going to have them in this business, right? There's been times where I've gotten like $14,000 in chargebacks, but I'm still here. You know why? Because I built up a good mindset to get me through those times. And that's what every single person in this business needs to have. It's very, very, very rewarding. It's probably the most rewarding, most noble business that I know of. And I came from real estate, right? So, that being said, in order to, where am I at here? So some of the effective ways of building your health would be meditation, working out, okay, listening to books, reading books. Some of the books that I would recommend, two of them are on sales. One of them is kind of a communication book. Write this down. One of them is called, you will never know that it's a sales book if you listen to the name. It's called Never Teach a Kid to Ride a Bike at a Seminar. It's a way of selling. You got that book, Dave? Right on. It's a way of selling without selling, right? We don't need to push the product down somebody's throat, right? All we're going to do is ask questions to get them to understand that this is something that they need, and we're going to lead them down a path on how to sell something, on how to, on why they need to buy it, right? The other book that you need to write down is called Never Split the Difference. And at first I thought this was a sales book, but then I come to find out that it's a communication book, right? It's how to communicate with people that are opposing. It's by an FBI negotiator called Chris Voss. And when he negotiates, he has to win 100% of the time. Otherwise, the person on the other end dies. So it's a great book on effective communication, okay? The other thing I want to talk about is, okay, so we're selling final expense, we're selling mortgage protection, we're selling IULs, and we're also selling annuities, okay? We used to start people on final expense because final expense is the easiest thing to do. They're older, they need it. You get to learn all the health conditions. You get to go through all the adversity of learning all the health conditions, trying to figure out where to place them. It's like a puzzle game, right? They got, diabetes and COPD and this, and all of a sudden you got to figure out which carrier will take them. Well, then we move people on to mortgage protection after that, okay? Because now they're used to it. Now we're dealing with a little bit of mortgage protection to help them cover a mortgage if they lose an income. But then we move on to IULs, okay? IULs is the same thing as mortgage protection on steroids because now they can build a tax-free retirement as well. And then annuities. Annuities is the same as an IUL, except you're taking a lump sum of cash, like somebody that has 401k and they're about to retire, they're done with their employer, they have 500,000 sitting in there. It's not, nobody's controlling it. They're paying fees on it, and they roll it over to something with no fees, no cost, and it's a guaranteed paycheck for life. Okay. So we want to skip the final expense and we want to go with mortgage. Why? Well, if you get really, really, really good at mortgage, you're going to get a really good paycheck, and then you can move on to IULs from there. Okay. So on average, a final expense policy pays on average about $800 annual premium. Okay. Mortgage protection pays on average anywhere from $2,000 to $3,000 in annual premium. IULs pay on average anywhere from $3,000 to $5,000 in annual premium. Annuities, the sky's the limit, right? Now, with mortgage protection, you can get paid right away because we're doing all simplified issued products, right? Except for F&G and NLG and Columbus Life. Those are not simplified issued. They have to go through underwriting, all of that. So we kind of stick to the IULs with those. With mortgage protection, you can get paid in 2, 3, 4, 5 days, depending on the carrier. Most carriers pay you within 2 days, okay? With an IUL, it's a long-term play, but it's a bigger paycheck, and it's a customer for life. Mortgage protection, you're going to get anywhere from about 30% of them to cancel, to charge you back. With an IUL, 92% of them stay on the books, so only about 8 out of 100 will charge back. Okay? They're a bigger paycheck, so we want to get you to IUL as soon as possible. Okay, so this goes back to the learning stage, right? We always want to be learning. If you're working on mortgage protection, start learning about IULs.
What did you say sorry, what did you say the statistics were for the mortgage protection? Because you kind of cut out right there
about
for
30%.
chargeback.
So 3 out of 10. Yeah. Now, that being said, I'm going to back up a minute here. You just brought up a good point, Jeff, that I wanted to address. Okay. As your business gets bigger, you want to get to a goal of selling 20,000 in annual premium per month. Okay. That is an awesome goal right there. That's only 5,000 a week. Okay. You hit 5,000 a week. Now your goal is 10,000 a week. Okay. 20,000 a month in annual premium. Then what we need to do is get you an admin. I'm going to kind of go over the steps of how you need to grow your business, right? What is an admin going to do? An admin is going to take care of your customer service. It's going to take care of your clients. It's going to call your carriers, and you're going to see your persistency level go up because now you have somebody communicating on your behalf with the clients. And let me tell you, I have a great admin. She's on here right now. Her name is Thea. And she does a fantastic job. And when you guys are ready, we can have her train your admin. Okay. So she does a lot more than that, but that's what you would start with, right? Is having them communicate with your clients and having them communicate with the carriers. I haven't been on the phone with a carrier in probably a year and a half. You don't want to be on the phone with the carrier. You're going to be on hold for 30 minutes before you even talk to somebody, right? If there's a difficult situation, then I'll call the carrier. But she's the one that calls the carriers for me. She calls the clients. She even follows up with the clients after 2 weeks later to find out if they have any questions on their policy. And that's the cool part about selling life insurance is you got to really follow up with your clients with the first month. And then after that, they already know the routine. I just pay the bill. And if I die, I get paid. Well, my beneficiary gets paid, right? In health insurance, you got to kind of be in there the whole time, right? So that being said, mortgage protection. Okay. Let me see. I had to change computers. I had my financial inventory up. Let me find a financial inventory, and then I'll kind of go through what I do on the financial inventory and how I structure it here. And I'll share my screen with you. Give me a second here, guys. There it is. Okay. I'm going to share my screen with you here. So first off, we'll go over appointment setting, and then I'm going to go over how I go through the appointment. Can you guys see my screen?
Yeah, is anybody recording this?
Yes, I'm recording this. Okay, so first off, when we set the appointment, all we're doing when we set the appointment is setting the appointment. A lot of new agents, their biggest downfall is they try to sell at the appointment setting stage. We don't want to try to sell anything. If they ask you questions, just answer the question and then set the appointment. Go right back to setting the appointment. Okay. So I'm going to go over the appointment setting here for 5 minutes, and then we're going to jump into the inventory and do a real appointment. Okay. So when I call somebody up, I'm just going to keep it simple, and I kind of confuse them right off the bat. The biggest thing here when you're setting an appointment is not to sound like a telemarketer. How many people, by a show of hands, gets a call from a telemarketer every day? We all do, right? Every single one of us. And so we don't want to, it's a telemarketer when you pick up the phone just by the way they talk. Hey, Mr. Simpson, this is blah, 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 blah. Or, hey, Simpson. Or, hey, Sean, how are you doing? Blah, 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 blah. Right? We don't want to sound like that. So the more confused I sound when I call somebody, the more they're intrigued, the more they're wanting to listen to me, the more they're like, who is this guy? Do I know this voice? Their brain is on fire trying to figure out who I am. So I call them up, ring, ring. Hey, Paul, this is Sean, just getting back to you here. Looks like you had sent in a request for more information about that mortgage protection insurance. Now, since I told them the subject, right, mortgage protection insurance, I'm going to go through it fast because I got to get to the end of the question before they hang up. The whole goal is to keep them on the phone for about 15 seconds. If I can keep on the phone for 15 seconds, that earns me another 30 seconds, right? So let me start over. Hey, Paul. Yeah, this is Sean Simpson. Just getting back to you here. Looks like you sent in a request for more information about the mortgage protection insurance. This is the type of coverage, just so you refresh your memory, this is the type of coverage that if something were to happen to you, you get hurt, you get sick, you get injured, God forbid, pass away, it pays off the mortgage and protects you and your family. Is that what you were looking for, or were you looking for something else? Now, I asked that question because I want to give them a way out. No telemarketer is going to give them a way out. And if they say, no, I'm not interested. Now I'm just going to throw a rebuttal at them. I'm just going to say, okay, if you don't mind me asking, what were you looking for? Well, we were looking for it at the time, and I'm just going to go into the rebuttal, right? We're not going to talk about rebuttals right now. We'll be on here for 2 hours. So then after that, let's say they say, yes, I'm interested. Or they say, yep, that's what I was looking for. Great. I'm calling to go over your options. I can't do that right now. I'm building posture. I'm going to let them know I'm super busy, right? Because if you're busy and you have the posture with a good, strong tone, they're going to understand that, oh, this guy, he's not just some Joe Schmo that I can, control, right? So I'll tell them, I'm calling to go over your options with you. I can't do that right now. I'm in between appointments here. But what I'd like to do is get you on the schedule to go over your options with you. What time do you usually get back in the door from work? Okay. Now I said that a specific way. It's not just what you say, it's also how you say it, right? I didn't say what time do you come home from work. I said, what time do you get back in the door from work, right? Coming home from work and getting back in the door is two different things. Because if they get off at 4 o'clock and I call them at 4 o'clock, they're driving home. But if I say, what time do you get back in the door from work? That means they'll get home at 4:30. So let's say Paul says, I get home at 4:30. Okay, great. I'm going to assume that he's married. What time does your wife usually get back in the door? She gets home at 6:30. Okay, fantastic. Now, I'm going to set the appointment. And the sweet spot is a half an hour after both of them get home. Obviously, if you have another appointment at that time, you can't do that, right? So the sweet spot is a half an hour. And I'm going to tell them, I'm going to take it away. I can't do 6:30, but I can do 7 o'clock. Does that work for you? Yes. Fantastic. Now, write these two sentences down. This is going to get your appointment to stick. Not every time, but a high percentage of the time. Okay. Do me a favor. At the time of our appointment, please have a pen and paper handy because I'm going to give you some more information, some important information that you're definitely going to want to write down. Now, let me explain it and I'll say it again. I said it that way. I didn't say, please have a pen and paper handy because I'm going to give you some information. Remember, it's not just what you say, it's how you say it, right? The reason why I said it that way is because, for one, they know it's going to be important. I use the word definitely because now it's super important. And then I said, you're going to want to write down. Okay. I chose for them that they're going to want to write it down. It's not my choice. It's their choice now. Okay. Now, the other reason why I say that phrase is because if you have a pen and paper handy and you're going to write down some stuff, are you going to be walking around? Are you going to be driving a car? No, you're going to be sitting down at a table, ready to write some stuff down. So I don't have to tell them be in a good spot. I don't have to tell them be, at a table. They're just going to know that because they need to have a pen and paper handy, right? So I'll say it again in case you didn't get the whole thing. Do me a favor, please have a pen and paper handy because I'm at the time of our appointment, because I'm going to go over some important information that you're definitely going to want to write down. Okay. Now, the last phrase that I say before I hang up the phone and say, okay, goodbye, looking forward to speaking with you, blah, blah, blah. The last phrase that I say is going to get them subliminally to say, yes, you can call me. Okay. And they're not even going to know what they did. And so I'll say it again. I'll say, can you do me one last favor? Give me about a 15 to 30-minute window between at the time of our appointment, because I have about 8 appointments ahead of you. Remember, building posture. I'm super busy. And I may be running late. But if I do get done a little bit early, I may call you a little bit early. Is that okay? Yes, they're going to say yes, right? And so by them telling me yes, what did they just say? They just said, yes, you can call me early. Yes, you can call me to sell me a mortgage protection policy, right? That's the last thing that come out of their mouth. They just gave me permission to call them. I'll say it again. If you don't have it, write it down. Do me one last favor. Give me about a 15 to 30-minute window on both sides of that appointment because I may be running a little bit late. I have about 8 appointments ahead of you. But if I do get done a little bit early, I'll call you a tad bit early. Is that okay? Yes. Okay. If you don't say, is that okay at the end of it, it doesn't, I mean, you're just basically letting them know you're going to be late. Okay. But we want them to say yes so that the last thing that people remember most, the first thing and the last thing that you say. And if you get them to say yes at the very end, then they're telling you, yes, you can call me. And they know that you may be calling a little bit early, maybe a little bit late. And I've called people 2 hours late before and they're there. If they want it, they're going to be there. Unless something weird happens, then they'll text me back, say, hey, can we reschedule? Okay. Now it's time for the appointment. The first thing I'm going to do, can you guys see my screen? Thumbs up. Okay, cool. So I always have this open and I'll put the name right here. Can you guys see my cursor moving back and forth? Yeah. Okay, cool. So I'll put the name right here. And a lot of times you'll have the birthday, right? And if you have their mortgage, you'll put that right here. Okay. So a lot of times what I like to do is people don't know that you care until they know how much you care, right? So I'll just open up the question. I'll say, hey, Joe, I got you on the schedule here to talk about mortgage protection today. Let me just start off by asking you, what got you interested in mortgage protection? Now they're just going to spill the beans. And they're going to break out every reason why they need it. And sometimes they may not have a reason. Oh, I was just looking into it. Okay, what got you to look into it? Sometimes you got to probe a little bit, right? The whole purpose of this is you're finding their pain point. You're finding their why. Why do they need it? Why do they want it? And later on, as we go down the road here, we're gonna use that to help them understand how important it is because they need to protect their family, right? And so maybe they'll say, well, like this guy I had earlier today that I sold a policy to. I asked him the same question. What got you interested in mortgage protection? And he was a young guy, he's 33. And he said, well, if something happens to me, I want to make sure that my kids can stay here and my wife doesn't have to pay on the mortgage. And I'm like, okay, that's good enough for me right there. That's what I want them to say. That's what I want to get them to say. And so then I'll just say, okay, and I'm going to just start going through it. I'm not going to ask them. I'll just say, okay, how much is your mortgage? It's 140,000. So I write that right here. And I'll say, is that a 15, 20, or a 30-year term? It's a 30-year term. Okay, I circle this. Did you guys refinance that recently, or is that a new purchase? That's a new purchase. Okay, perfect. When did you purchase it? Back in 2022. Now, why is this important? Because if they have a 30-year term, what do we sell? We sell whole life and we sell term policies, right? So if they have a 30-year term, and let's say they only qualify for prosperity. Well, prosperity doesn't have an IUL. So you have to put them into a term policy. And so if they have a 30-year term, you don't want to put them into a 20-year policy because the 20-year policy is going to end and they still have 7 years left on their mortgage, right? So like, let's say that this person has a 30-year mortgage and I asked him, I said, when did you purchase that? Oh, back in 2012. Okay, so he's already been paying on it for 12 years. So he has less than 20 years left on his mortgage. Okay, does that make sense? Nod your head if it does. Or go like this if it doesn't. Okay, cool. So that's why we need to know this information. Okay. Now, there's going to be situations where you can't cover the full term because they're 70 years old and they have a 30-year mortgage. Who would want to give a 70-year-old a 30-year mortgage in the first place? But they're out there and they can only qualify for a 10-year term, right? You just got to deal with it as it comes up, right? But that does happen. Okay. So the next question I'll ask them is, what's the value of the house? And let's say the mortgage was 140,000 and the value is 200,000. Now, as I go through this, I'm going to start planting some seeds. Okay. And I'm just going to talk about it and get them to agree with me. And the way you get somebody to agree with you is you say, huh, or correct, or right? Like that. So then they'll say, let's say they say the value of the house is 200,000. And right down here in equity, I'll just put in, okay, so that gives you about 60 grand in equity there. So that's pretty important to protect. I'm sure that if something were to happen to you, you'd want that equity to go back to you and your wife and your family, right? Yes. So I just said, right? Yes. Right. I just want them to get to say yes along the way the whole time, right? There's small little bitty commitments along the way. Okay. And that book, Never Teach a Kid to Ride a Bike at a Seminar, will teach you about that as well. So then I'm going to add in here, what's the monthly payment? Now, this is really important. Okay. There's a couple of different ways people will tell you. Now, when you buy a house, I don't know how many people have bought a house before or not. So I'm going to just kind of go over the generic version of it. When you buy a house, they structure your payment into a principal interest loan because you got to pay the bank interest. And the bank wants to make sure that if the house burns down, that they're going to get their money back. They also want to make sure that the taxes are paid on that. So they're going to pay the taxes for you. And so in that payment, we call it a pity payment. Write it down. PITI, pity payment. Principal, interest, taxes, and insurance. Okay. And so you ask them, what's that monthly payment on there? 2207. Okay. Does that include taxes and insurance? Or does that include escrow? And if they say no, now that is just the principal and interest. That means that they're paying their taxes and insurance on their own. Okay. So you have to ask them, how much do you pay for your taxes? How much do you pay for your insurance? Okay. This is getting a little bit deep here, but it's important to know why. Because if they die, that's the payment that their wife has to make, or their other spouse has to make to stay in the house. If they don't make that pity payment, principal, interest, taxes, and insurance, even if it's not escrowed in there, then guess what? Either the government's going to take their house because they didn't pay taxes, or the bank is going to take their house because they didn't make the bank payment, right? So this is important to know. Okay. So we already discovered the equity. We put that right down here. And then I'm going to ask them, do you pay extra towards the mortgage to pay off the loan early? And some people will say no. Some people will say yes. If they say yes, great. I just say how much? $100. Okay. Then you just put $100 there. Well, why do we need to know that? Well, that gives us just more information. If they pay a little bit extra on their mortgage, they're probably people that care about their finances, right? They care about, trying to pay off that loan a little bit early, right? But we can also show them how they can pay off that loan a little bit early through a IUL or a mortgage protection policy, a cashback policy, right? So then at this point in time, there's this line here. So this is where I kind of take my time and I say, now I know a little bit about them. They know a little bit about me. They kind of feel comfortable with me a little bit. Now I'm going to build my credibility with them. And if you don't have a website or if you don't have Lead Champ Pro, then what you're going to need to do is take your state license, take a picture of you, and take this picture, I don't have it. It's a picture of all the carriers. It's on Jamie's website, livinghopeffl.com. And what you'll want to do is put that in a folder so that when it comes time to build credibility right here, you can just send them an email and make sure they get in there. And so what I would say is I'd say, okay, I need to get some logistics out of the way. Since I'm calling you in North Carolina, North Carolina wants us to make sure that you lay eyes on our license since we're doing this over the phone. Now, they don't necessarily need to do that, but I tell them that because that makes sure that they will go and look at your license. Why do I want them to look at my license? Because if I don't, later on down the road, when I'm asking for the personal information, the social security number, the bank account, they're going to say, I don't even know who you are. So I'm getting all of that stuff out of the way right off the bat. I don't want them to say, well, I don't know who you are. Well, if they use that later on, I'll say, yeah, you do, because I just showed you my license and I showed you all of my licenses, right? Here's the other thing. When you send an email, now, if you're talking to a person that's 75 years old, you can know if they know how to get into their email. Because if they don't know how to use their phone, their text, or their email, you're going to have a hard time getting them to sign an application, right? Because we do it through text and through email, depending on the carrier. Okay. So what I would do is I'd say, okay, Joe, we need to get some logistics out of the way here. Since you're in North Carolina and we're doing this over the phone, the state of North Carolina says that I need to have you lay eyes on my license. So do you have access to your email right now? Yes. Okay. I'm going to send you an email right now. I include the state license, a picture of me, and the little thing with all the flyer with all the carriers on there. Why do you need those three? Well, for one, if you are talking to somebody over the phone and you got to give them your personal information, do you think they'd feel comfortable if they knew who they were talking to? Yes. So if they see me, then they have a picture of what I look like in my mind throughout the whole conversation. Okay. It's like talking to a real person now. I'm not just somebody on the other side of the phone. Okay. So I send them a picture of me. I send them a picture of my license, and I make sure they open the license, and I'll point out, do you see my license number right there? Yes. That is basically my social security number for my business. I tell them that because I'm going to ask them for their social security number, right? So that would make you feel comfortable if I gave you my social security number. Well, that is my social security number for my business. And sometimes, not all the time, but I'll even tell them, you can go ahead and screenshot that and verify it with the Department of Insurance in the state of North Carolina or wherever. Okay. Then once I'm done with that, I'll show them the carriers, and that's going to transition me back into going through the rest of the financial inventory. And so I'll say, do you see that picture of all those carriers there, those providers? They'll say, yeah. I'm partnered with about 15 plus or 30 plus, whatever you want to say, A-rated carriers nationwide. So what that allows me to do for you is customize something that best fits your situation and your needs, and most importantly, fit your budget. Okay. Yes. Now, what did I do? I just killed all the competition. Now they know I'm the dude. I'm the guy. They don't need to go anywhere else. I have access to 30 plus A-rated carriers nationwide. I'm going to shop around for you, customize something that best fits your situation and your needs, and most importantly, fit your budget. So I'm there for you. And now I got the budget question out of the way, because what is the number one concern everybody has when you call them? Every single time, it's in the back of their mind, what's it going to cost? Every single time. And so if you get that out of the way, help them feel comfortable, the wall will just go down, right? And they're going to feel more comfortable talking to you. Okay. So now that's transitioned me back into here. Okay, sir. Now I'm going to also, as I go throughout this, I'm preparing them along the way for the next step. Okay. I'm going to take 5 minutes and ask you some finance questions, some medical questions, And from there, I'll have an idea of which one of those carriers may qualify you. I'm not giving them everything. If I got somebody like the last guy, he's 33, perfectly healthy, no prescriptions, nothing. I'm not going to tell him I'm going to get him approved. Weird things happen. My son-in-law is 28. He's never been on a prescription and he didn't get approved with America. So I don't ever tell anybody that they're going to get approved. I try to take it away from them to let them know that, look, this is a big thing that may not happen, right? So, and by doing that, it's like the cat and the string. You pull the string, the cat chases it. You stop pulling the string, what does the cat do? He just sits there and he looks at it. You pull the string again, he goes after it. It gets too far away, he attacks it, right? And so that's kind of how the sales process goes. You want them to understand that nothing is free, that nothing is given to you. You actually have to qualify for this. And so I'll tell them, okay, sir, you probably know this, but this isn't something that you can go buy. You have to qualify for it. So I'm going to take 5 minutes, ask you some finance questions, some medical questions. From there, I'll have an idea of which carrier may qualify you. And then what we need to do is get you in front of the carrier. And so by doing that, what we're going to do is submit a simple request to the carrier. Okay, now, what did I just do there? I'm analyzing all of this for you guys so you understand the reasoning of why we say different things. It's not just what you say, it's how you say it, right? And so I let them know that we need to submit a simple request to the carrier. What word did I just focus them on? Simple, right? We need to submit a simple request to the carrier. All right. And then they'll say yes. Now they already know the next step. Okay. So now I'm going to go through the financial inventory and I'll put their birthday right up here in this blank space. And I'll ask them, what's your height and weight? I'm 5'10", weigh 200 pounds. Put that right there. Okay. And then the guy's name is, Joe Doppy, and he's 49 years old. And I'll say, what's your occupation? What do you do for a living? I'm a truck driver. Okay. So you put truck driver down here. And then what's your monthly income? I make $4,500 a month. Is that take home? You want take home. You don't want gross. You want take home. Because what we're doing is to try to find the free money, the money, that bubble that's in there, to know how much they're going to be able to spend, right? Because if they only have $700 left over income for the month, you're not going to be able to sell them a policy that's going to cost them $500 a month, right? But if they have $5,000 a month, $500 may not be too much for them, right? So you're just going to know by that. And then later on down the road, if they say, well, I want to look at my finances, I would say, well, didn't we just do that? It looks like you can afford it here. So what's the real reason here? Is it because you don't like me? Or is it because you're not sure if $200 a month is worth protecting your family? You know what I mean? So you can throw it right back at them. So what I'll do is I'll ask them, what is your monthly income? $4,500 a month. Is that take home? Yes. Okay. Are you married? Yes. What's your wife's name? Joan of Arc. How old is she? 680, no, 48 years old. What's her occupation? She doesn't work. Okay. Does she have any income from retirement or disability or anything like that? Nope, she doesn't have any income. Okay, now I'm going to plant another seed, right? So if something were to happen to you and Joan had to make that $2,200 monthly mortgage payment on her own, she may be able to figure it out, but she's probably going to have a pretty hard time for a while, huh? Huh. Yes. That's why we're on the phone together. Okay, let me see if I can help you out here. You see how I'm getting them to tell me their pain points every single time, right? So then I'll ask him, now I know he makes $4,500. Now the next step is I'll say, okay, what is ballpark your monthly expense bill? And I'll say, okay, if you were to add up your car payment, your gas, your insurance, food, date night, cell phone, And I'll just throw that stuff out there and I'll say, if you were to add all that up, ballpark, what is that? Now, if you don't say ballpark, they're going to add up every single thing and it's going to take you 10 minutes to figure out what their expenses are. And if that's the way to do it, that's okay. You can do it that way if you want. That's the way I did it actually when I first started. That's why I'm telling you this now. And so let's say they'll say 3,000 a month. Okay, so 3,000 a month, is that the high end or the low end? No, it's probably more around $3,500 a month. Okay, all right. So if my math is correct, now I'm doing a little bit of math over on the side. I'll take 4,500 income minus 3,500 in expenses. And I'll say, if my math is correct, that leaves about $1,000 extra per month, right? Yeah, that's about right. Okay, cool. Now, what I'm going to do, I try to keep the finance questions in the group, and I try to keep the health questions in the group, right? So down here, there's some more finance questions right down here, right? And so I'll use these next. I'll say, okay, is there any 401k? You see this question right here? It says, what do you have to offset the cost of the mortgage when you die? I'm going to say that just in a little bit different way. I'll say, is there any 401ks, IRAs, stocks, bonds, mutual funds, CDs, maybe a large savings account that would offset that mortgage if something were to ever happen to you? Nope, I don't have anything like that. So no 401k, nothing. So you're kind of vulnerable out there. Okay. Do you have any? So I just planted another seed, right? I didn't have to have him agree with me. I just planting it. Do you have any type of a life insurance product in place? Right now, let me preface this by telling you, when you say life insurance, people sometimes don't realize that life insurance, mortgage protection, life insurance is the same thing. So what they're referring to when I say, is there any life insurance in place? A lot of times people will have a term policy or a whole life policy, a small whole life policy, and a term policy, and those policies won't have any living benefits. Very little time do I find people that have a policy with living benefits. And if they do, they don't even know they have living benefits. And so I'll ask them, do you have any type of life insurance product in place? Yes, I do. Okay, how much do you have? Why do we ask this now? Because when I get into the carrier and I get into the application, if I come down to the price and they're like, nope, that's too much. I already have life insurance anyways. I don't need this. Right? But if I already know about their life insurance, they can't use that against me. Okay, we can also use this to help offset the amount of the mortgage. Up here is 140,000, right? Well, what if let's say, hypothetical example, he's 70 years old, has a lot of health issues, doesn't qualify for a full mortgage payoff. Then we got to change him to a whole life coverage, and that's going to pay off a portion of that. So then we can say, okay, you already have 60,000 of life insurance. Why don't we just get you 40,000 and that'll cover the majority of your loan? Right? So it's another way to attack the rest of it. Another thing that you can do is just say, okay, what we can do, there's two types of mortgage protection. You can do a full mortgage payoff, or you can do a payment protector. And the full mortgage payoff would be one lump sum policy that pays off the whole mortgage. A payment protector would be like a whole life policy, a final expense policy that would just cover the payments for a term, right? And so maybe it covers them for 6 months, a lot of times 12 months or 18 months, right? So if they don't qualify for a term policy, now I'm going to kill the term policy and say, you know what? If we were to, let's say, we're going back to the example of the 70-year-old. Let's say, because I know just from experience that a 70-year-old is going to be, $500, $600, $700. And I know his budget is $1,000. I can't sell him a term policy, even if he did qualify for it, because he's going to laugh at me and hang up on me, right? So I would say, okay, I could probably maybe get you qualified for a term policy that will get you a full mortgage payoff, but I'm going to kill it now. But that would probably be out of your budget for $500 to $700. And on top of that, it's going to end in 10 to 15 years. I'm sure that's not what you want, right? He's agreeing with me again. All he's got to do is say yes, right? So the other option is to do a payment protector. And what that is it buys time for your loved ones to have time to mourn, have time to get the house ready to fix up so they can sell it, or you can fix up the house and turn it into a rental property, or you can refinance the house in your kid's name and they can move into it. Okay. And then what I'll do is I'll give them 3 options: 18 months, 12 months, 6 months, and then close the deal. Okay. So let me back up. I just kind of went off on a tangent there, but right here now, since I already asked this question, I know they have a little bit of life insurance. Let's say he's got 60,000. Now I'm coming up here to the health questions. Are you a smoker? No, I'm not a smoker. Have you ever smoked? Yes. When did you quit? 2 years ago. Okay, perfect. He's a non-smoker. But if he tells me that he's a non-smoker and he quit 6 months ago, technically, you have to list him as a smoker. It has to be a non-smoker for a year, technically. Now, do I do that every time? I'm not going to tell you the answer to that one. So right here, then after that, you're just going to ask, what is the medications that you're currently prescribed? Now, if you don't say prescribed, they're going to give you all the Tylenol and the ibuprofen and Advil that they can take, right? So what is your prescription medications? And let's say he says lisinopril. So you write down lisinopril for high blood pressure. You write down what the medication is, what it's for, and then you'll say, okay, and as I'm doing this, I'm looking at the cheat sheets and trying to figure out, okay, can I fit them into a term policy? Can I fit them into a whole life policy, a final expense policy, right? And so he says, hi, lisinopril. And I'll say, okay, what other medications are you taking? I'm not taking anything. Okay, have you had any surgeries or hospitalizations in the last 5 years? Nope, none of that. Okay, how about mom, dad, grandma, grandpa, anybody die before age 60? Nope. Now, the reason why I ask about family, the more you ask them, the more they're kind of concerned about, oh, maybe this is a little bit difficult to get approved. Number 2, if you're doing an IUL, they will ask questions like that. Okay, not with America or Moo's IUL, but when you get into the big IULs where people want to put in 2, 3, 4,000 a month, they're going to ask questions like that. Okay. Then I'll come down here and I'll ask them some medical conditions. So I'll say, okay, let me ask you these medical conditions, and I'll just run through it real fast. Have you ever had a heart attack, stroke, mini stroke, cancer? No. Any stents ever put in? No. Do you have diabetes or neuropathy? No. High blood pressure? Yep, you got one medication. We'll mark you down for that. Do you have any lupus, rheumatoid arthritis? No. Any asthma, COPD? No. Thyroid, anxiety, depression, kidney or liver disease? Nope. Okay, cool. Any felonies or misdemeanors in the last 10 years? There's carriers that won't take them if they have a felony in 5 or 10 years, depending on who they are. Misdemeanor, no big deal, right? In a IUL, nope, they're not going to take them. I'm talking about the big IULs, NLG, F&G, Columbus Life. Okay, so then now I have an idea of what he's on, and I have an idea of what he can get approved with, right? And I'm looking at the cheat sheets every time I write down a medication. I'm like, okay, that medication is for high blood pressure. That medication's for COPD. If you don't know the medication, type it in the Googler, and it's going to tell you it's for this, this, and this. And sometimes, as you guys know, sometimes medications have dual purposes. Like gabapentin. If they have diabetes and they're on gabapentin, they have neuropathy. And if they have neuropathy, they're not going to get approved with any carrier, and they only will get approved with AIG or Great Western. Now, if they are on gabapentin and they don't have diabetes, it's for a nerve pain because it's a nerve medication. And so they can still get approved. And sometimes you might have to fight for them if they don't get approved. Okay, so that's just an example. So if you don't know, Google it. Okay, so then I'll tell them and I'll say, okay, now I'm going to prepare them for the next step, right? We're always going to, the rule of thumb is to go with Americo first. Okay, why? Well, Americo is for one, it's a great company. Number two, it's got a super easy application. Number three, it's got text message signature that works like a charm, unlike some other carriers. Number four, they pay us pretty good, right? So go with Americo first if you can. And what I'll say to the client is I'll say, the next step is what I'm going to do is recommend you for a company called Americo. And I tell them two things that are about the company, and that's about it. And I move on. And I'll say Americo's been around for over 110 years, and they're based out of Kansas City, Missouri. Now, I do my application a little bit different. If you guys were on the call earlier today, I did it exactly like that on the call earlier today. Um, and that's how I do Americo's application every single time. And so I'll tell them, I say they have a two-part application process or two-part request form. What I'm going to do is I'm going to ask you some questions. One of those questions is a social security number. They use that to verify who you say you are and that you're not taking out insurance in somebody else's name. And then they also use that to check your prescriptions against the MIB. The MIB is not the Men in Black, it's the Medical Information Bureau. And then when it comes back, it's going to tell me one of two things. It's going to either say declined, and if it does, that's okay. We'll just pivot to another carrier. Or it may say continue asking questions. If it says continue asking questions, that's what we want it to say, but that does not mean that they're going to approve you. That just means they're giving us permission to submit a request to them. Then at that point in time, I'm going to go over all of the policy with you, all the benefits, and then we'll fit it into your budget, and then we'll submit the request. Okay? Okay. Remember, another yes, right? He already knows the process now. I didn't tell him anything about the banking information yet. I just told him I'm going to ask him. I'm giving little bitty spot pieces here and there. So now I'll jump into the Americo application. I'll ask him all those questions. I send them the text form to do the privacy or to do the HIPAA form. And I'll ask him, do you know what a HIPAA form is? Yeah. And even, no matter what they say, yes or no, I'm going to tell them, okay, yeah, it's just like the doctor's office and the nurse's office. It basically says that me and America, we cannot share your information with anybody. Now they're comfortable with giving me important information, right? So then I'll go through, I'll get the HIPAA form. They'll sign that. And then I haven't even told them a price yet. And then what we're doing is I'm going to go through all of the health questions, all of them, until I get to the beneficiary page. And I'm going to use the beneficiary page to close the deal after I tell them the price. Okay. So now I'm just guiding them along the path. So I ask all the health questions. Now I'm done. I'm at the beneficiary page and I'll say, and by this time, I already know if it came back because that little green ribbon up at the top will tell me continue asking questions, or it may say, if it says decline, you're going to get a big old yellow box. And you guys know about that. It'll pop up. You can't go any further. Okay. But even though it says continue asking questions, I keep going all the way to the end of the questions. And then all I have left to do is build the value of the product, price condition them, and then deliver the price and close the deal. And that's the way you're going to do it every single time. When you go to tell them a price, the first thing you're going to do is build the value. The second thing you're going to do, and if you're not writing this down, you're missing out. You have to write this down. The first thing you're going to do is build the value. Then you're going to price condition them. Then you're going to deliver the price and then close it. Be done. Okay. So let me back up so I can kind of make this a continuous thing. So we're going late, guys. We're going into Grady's call here. Are you guys okay with staying on? Give me a thumbs up if you're good. Is this good information? Yes? All right, cool. So After you go through all the health questions, then you're at the beneficiary stage, and I'll say, okay, let me check to see if it came through or not. Yep, it did. It says continue asking questions. Now I'll reiterate what I said earlier. Now, that doesn't mean I'm going to take it away. That doesn't mean that you've been approved. That just means that they're giving us permission to submit a request to that carrier. Okay. So right now, what I'm going to have you do, and this is really important, you make them grab a pen and paper. So, sir, can you grab a pen and paper? I'm going to go over all the benefits of the policy, and I'm going to have you write it down. Why is that important? Well, in any sales process, any learning process, we're humans. We learn by our five senses, right? But we can't use all of our five senses. But if we can, I mean, we can't smell it, right? But if we can touch it, we can see it, and we can hear it, we're going to learn better that way. And I want to get him super excited, right? So I'm going to do it the same way I did for the guy earlier today. So I'll say, okay, and he'll say, okay, I'm ready. So I'll say, okay, the face amount, and you guys, as I do this, I want you to write it on your piece of paper as if you were the client, because I want you to visually see it on the piece of paper like the client will see this as I'm building the value of this product. Because the whole purpose of building the value and then delivering the price is to get them to understand that the value of this product is this big, but the price is this big, right? And if we can get everybody to see the value this big and the price this big, they're going to buy it. I mean, what if I told you that I had a Lamborghini that's worth $150,000 and it doesn't have much wrong with it. Maybe a couple of scratches on there. It's only got like 50,000 miles on it. And I don't know. This guy, his father died and he can't take it. He doesn't want it anymore. He doesn't care about money. He's rich and he wants to sell it to us. He just wants $2,000 for it. What would you do? You'd buy it. If you don't have the money, you'd figure out a way to get it, right? Because you can always resell it, right? It's the same way because the value is big and the price is little. So right now we're going to build the value of the product. And so like this guy, he had 350,000. So I told him everything is built on the face amount. The face amount here is $350,000. So sir, write down $350,000 and then next to it, put down death benefit. Okay. Now that is, if you die the next day, Joan is going to get a tax-free check for $350,000. Now, underneath of that, write down tax-free in big letters and put a star by it because that's huge. If you had $350,000 of income, how much taxes do you think you're going to pay? And every single one of them would go a lot. Right? So you're just getting them to list a whole list of benefits. So the next benefit I want you to write down is called chronic illness. And right next to it, put down $350,000. Now, chronic illness is your 6 daily living activities. We all have to feed ourselves, and you don't have to write 6 daily living activities. I'm just going to go over them with you. We have to feed ourselves, medicate ourselves, dress ourselves. We have to bathe ourselves. We have to toilet, and we have to be able to transfer. If you can't perform 2 of the daily living activities, you can withdraw up to, you have to say up to $350,000. Now remember, it's not what you say, it's how you say it. How did I say 300? Did I just say 350,000? No. You get excited, right? $350,000, right? Make it sound huge. Okay. The next benefit I want you to write down is called critical illness. And right next to it, write down $350,000 in big numbers. Now, this is if you have a heart attack, stroke, kidney damage, liver damage, ALS, Huntington's, cancer. You have a big life event happen, you can withdraw up to $350,000. And you can tell stories in this too. People relate to stories. So the next one I want you to write down is terminal illness. And right next to it, write down $350,000. And then right here, a lot of times is where I tell a story. And if you have stories, great. And the story that I tell is a true story. I'll say I have a buddy of mine that passed away in 2019. He went into the doctor's office, found out he had a canker sore in his mouth that he couldn't get rid of. So they tested him for cancer, come to find out he had cancer. And so they cut out half of his tongue. He goes back in for a checkup, and come to find out the cancer went metastatic. And he ended up dying 2 months later. He left 4 little boys behind underneath the age of 10, and he was 32 years old. And so when I tell people that story, notice my emotion, how I'm not getting excited anymore, right? I'm calming down. It's not what you say, it's how you say it. And so then it'll hit home with them, right? Stories sell. And I'll let them know that if his wife had this policy, she would have had a paid off house, and she wouldn't have had to move back to Arizona to get support from her family. And her kids wouldn't have been uprooted from their schools and all of their friends. And I'll say the next benefit is called level premium. Level premium. Now, you've heard of those policies that after every 5 years, because you're older, the carrier thinks that they should charge you more, right? Yeah. Not this one. You're 49 years old right now. When you're 55, you're going to be paying as if you were 49. They're going to give you a discount for the rest of your life. Pretty cool, huh? Yes. The next benefit is called, well, if it's an IUL, you would just say cash value, right? If it's final expense or a whole life policy, you'd say cash value. Okay. If it's term policy, there's no cash value, so you're not going to have them write that down. But if it is cash value in an IUL, what I would say is, okay, the next benefit is called cash value, and I'll say write that down. What this does is it builds cash value that you can borrow from, and you can grow tax-free because it's indexed with the market. And the cool part about it is it participates in the gains. It does not participate in the losses. So what that means is if the market goes up 8%, you get to participate. If the market goes up 12%, you get to participate. If the market drops 15% like it did in 2022, you get zero. Zero is your hero. You don't get anything because nobody else got anything either. But guess what? You get to keep all your money. You don't lose anything. And that's the name of the game, is how much money we can keep, right? They'll say, yep. Okay, great. Now, any questions on that? No. The next step is let me show you. Let me get into the pricing here, and we'll let me know how much. Or let me tell you how much it's going to cost. Now, while I'm going back to the pricing page, the product page is where it's at on Americo. I'm gonna price condition them. I want them to understand that it's going to be lower than what I'm going to give them. So I'm going to tell them a story. I just got a guy that with this same exact policy, he qualified for 400,000. It's a little bit more than what you're qualifying for. And he was a little bit older, and his cost was a little over $500 a month. Now, the reason why price conditioning is important is because you want them to get that pain point out of the way. If you tell them $100, you're price conditioning right there, and that's the actual price, right? So you don't want to price condition them on the real price. You want to price condition them on a price that is not there, so that they understand that it's going to be lower. And not only that, you can get some information back as well. Okay. So here, if I tell them that story and I say he paid over $500, I may get back nothing, no response whatsoever. I may get back a response that says, oh my gosh, that's going to tell me, oh man, because what if theirs is like $300, right? It's not much lower. right? So now I get a feeling of what they're going to respond to. What if I tell them his was $500 and they say, right? It's kind of nonchalant, right? Now I know that, they know it's going to be cheaper and they may be okay with it, right? So that's why I'm price conditioning. Okay, his was $500, but yours, now I'm going to deliver the price. Now, we always want to make it seem little. Build the value big, make it little. 300 when I told them about the face amount, I said 350,000. Okay? Now when I tell them the price, I'm going to make it seem small. Okay, I'm pulling up the price here. Um, huh. Actually, yours is only 149. I didn't say 149. I used the word only, and I used a tone of voice of like, wow, that's pretty cool. That's pretty cheap, right? Because all they're hearing, they can't see you. They can't use body language. When you're in the home, they can use your body language and feel your spirit, right? They can't do that on the phone. So you have to use voice inflection when you're on the phone to get them to feel the emotion that you are trying to portray out to them, right? And so when I deliver the price, I'll say, huh, yours is only 149. Wow. And a lot of times they won't say anything because they're processing it. And so you just let them sit there in silence, okay? Because they're thinking about it. You already know what the next step is. Your brain is like, let's move on. But you can't move on because they need to process that. And you're going to get some feedback. And they'll start making noises like, or that's too much, right? Now, really, if they don't say anything after 10, 15 seconds, I'm just going to close them. And I'm on the beneficiary page, right? Because I've already got the health questions out of the way. I'll say the next step here is just to get your beneficiary in here. And then what we're going to do is the next page after that is to get a financial institution or a credit union to be on file, like an account number, a routing number. If you're approved, not when, if you are approved, then at that point in time, they'll take that first payment. And then here's the best part. Then you're covered right away without having to pee in a cup, do a blood draw, or a medical exam. Pretty cool, huh? Yes. Now, I went through that whole process. They just said yes, so I'm moving on. I'm going to get the beneficiary. If they're not comfortable with the payment, they're going to tell me right then and there. Right. And then I'm going to get the beneficiary. The next page is the payment. I'm going to get all the payment information. And if they're not comfortable, they'll tell me right then and there. No, I don't want to do this right now. Or, oh, that's too much money. Okay, perfect. No problem. I'm glad you told me. Okay, let me address this. When you get an objection, the worst thing you can do is respond back like that immediately. Now, I can't do that right now. If somebody jumps on you no, I can't do that right now. Okay, no problem. Okay. That's anxiety. You're creating anxiety in yourself and you're creating anxiety in them. They're going to follow what you do. And if you come back with a rebuttal right away, they're going to think that you're trying to sell them on something that they don't want. So the best thing to do is if they give you an objection, create some space in between the words and then say one of two or three things. I understand, or perfect, or no problem. No problem. I understand. Is it because then you ask them a question? The people that control the conversation ask the questions. Is it because of something that I said, or is it too much money for you? Of course, they're not going to say it's something that you said, right? So it's going to be too much money. So it's too much money. Okay, no problem. Let's see if we can go back here and see what we can do here for you, right? So then you go back to the product page, just change the amount, until you find something that they're comfortable with. Okay, is 149, that's too much for you? Well, we can go down to half the mortgage. And that would be, I don't know, 188 or 187.50. And just put in, I don't know, 185. We'll just say it's 200. We'll just say 200. So 200 is going to be, $96. Now, when you close them, if they're giving you, kind of kickback, you always want to close them on a multiple choice question, because a multiple choice question is a definite answer. And with a multiple choice question, they already have the answer. You're giving them the answer. If they want to answer something that's not in the multiple choice answers, then they have to think outside the box. Okay. And so here's an example. We drop the price down and it says, $96. Are you comfortable with that? Or do you want to try a higher amount? No, I'm comfortable with that. Okay, great. Go back to the banking information, get the banking information, fill out the rest of it, send them a text message, and you're done. And that's how you close a mortgage protection policy. Simple as that.
That was fire, Sean. Building that value is critical. So thank you for that.
Yeah, you're very welcome. So now when you're done, when you get done, let them know what's going to happen next, right? Because this is where you get chargebacks if you don't do this. If you just sell the policy and never contact them again, you can guarantee that policy is going to charge back, right? Because they don't know anything. So the next thing you're going to want to do is just tell them, say, I don't know. And whether you tell them that they're approved right away or not, that's up to you. I'd never tell them that they're approved right away. Okay. Well, I shouldn't say never. This guy I just talked to, I did. Sometimes I do. But most of the time, I don't tell them that they're approved right away. And the reason why is because that gives me a chance to follow up with them. And in this case, now my admin is following up with them, Thea. And so I'll give them her phone number. And if it's only you, make sure they have your phone number. Let them know that you're going to be their life insurance agent for life. And sometimes I'll just joke around and say, okay, I got good news and bad news. If I'm going to tell them that they're approved, I'll say the bad news is you're stuck with me forever now because I'm your life insurance agent. The good news is you got approved. Oh, great. Fantastic. Right. But if I don't tell them, I'll say, okay, what's going to happen next is my assistant's going to give you a call tomorrow or the next day and let you know if you've been approved. Okay. And her name is Thea. Her number is 531, blah, 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 blah. And I'll say, also, you have my cell phone number. This is the number I'm calling you on. And if you have any questions, don't ever hesitate to call me or call Thea, and we'll be there to help you with any questions that you have. Okay. And I'll let them know that Thea is going to be a little bit easier to get a hold of than I am. And then I also let them know that I'll send you a text message and an email with all of your information of the policy that you just submitted. And then when she calls back, she's going to also ask them if they had, just got a call from a client, sorry, if they've gotten their policy. And if they did get their policy, she'll say, okay, do you want Sean to go over your policy with you? And if they say, yeah, she'll schedule a time for them to go over the policy with me, get them back on my calendar. It's just great customer service. Sometimes the policies get mailed out and I'll say, okay, the policy is going to get mailed out to you. It's going to take about 10 to 14 business days to get to you. And then I want you to call me if you have any questions. Can you promise to do that? Yes. But then 2 weeks later, she's calling or the system is following up. Sometimes she calls, but a lot of times the system just follows up and it'll send them a text. Did you get your policy? Yes. Do you have any questions? If not, you're good to go. And they'll text me back. Nope, I don't have any questions. I'll be sure to reach out if I do. And my persistency rating with Americo is almost 90% with mortgage protection and final expense. all because of customer service. Okay. So I know we've been on here for an hour and a half. I'm going to open it up and answer any questions, and then we'll jump off here. Anybody have any questions? No? Going once? Going twice? All right. Y'all, good day. Sorry.
I have a question, actually. I'm sorry.
All right, Jeff.
So sorry. Last minute question. So I had a question. When you're going through your process with them and you send them the first HIPAA forms, they're getting those forms. It's going to say whatever company it is. So they're already knowing what company you're going with.
Yeah, I let them know. I'm going to recommend a company called Americo, and they have a 2-part request form. And in that request form, I'm going to ask you some questions. One of them is going to be your social security number. And then they use that to verify who you say you are. They use that to check your MIB. And then what I'm going to do is send over a HIPAA form for you to sign. Do you know what a HIPAA form is? Yep. Okay. Yeah. It's the same thing as when you go to the doctor's office. It's that privacy statement. It basically says that me and Americo, we cannot share your information with anybody. It also allows them to check your information against the MIB. Okay? Yes. I'm always trying to get a response from them. That's why I always say, okay, huh, right? Because I want to hear their response. Because a lot of times, like this call earlier today, he had 3 kids in the background. So if I didn't do that, I don't know if he's paying attention to me. And I want to make sure that he's paying attention to me.
Okay. And then one last question is kind of a stupid question. When you say you tell them it's a request form, I'm just trying to understand, what do you mean? What they ask, request for what exactly?
Request for coverage.
I mean, is it like a request to get a quote, or that's what I was just going through my mind?
It's an application. It's an application, but I don't like calling it an application because sometimes people get a little scared of the word application. So I'll just say a request for coverage, or I'll say a request form, right?
Gotcha. Okay.
But you can use whatever word you're comfortable with. You can call it an application. It's not a bad word, but that's just what I prefer. Any other questions? All right, guys. Live dials is happening. So if you guys are on, you're going to hear other people, doing live sales. Okay. A lot of times it's silent, but just be a fly on the wall, and you'll learn just by listening to other people. Josh and Jamie, I'm on there. New people are on there. And I encourage you guys, if you're running an appointment, to unmute so that we can help you. All right. All right, guys. You guys have a good day.
Thank you, Sean.
Thanks, Sean.
Yep, you're welcome.